14 Future Trends to Watch in Stock Investments. Hey there. If you're like me and always looking for that edge in stock investing, you're absolutely in the right place. The stock market is constantly evolving, a fascinating, dynamic beast, and staying ahead means keeping a keen eye on emerging trends. I've been in this game for a while, and I've picked up some insights that could genuinely help you navigate the future waters of investing. So, let's dive into some exciting trends you should definitely watch out for. 1. Keep a laser focus on tech innovations. Technology, it's undeniable, is reshaping industries faster than ever. From the burgeoning world of AI to the intricate layers of blockchain, these innovations aren't just buzzwords, they're powerful catalysts for fundamental change. What's interesting is that companies truly leading in tech innovation often significantly outperform the broader market. Consider this: global AI funding exploded in 2024, reaching over $100 billion. An astonishing 80% increase from 2023, with nearly one-third of all global venture funding directed toward AI-related companies. This isn't just about big names, it's about the disruptors. So, look for those tech-savvy companies that aren't just adopting but pioneering change in their sectors. They could very well be the next big thing, the ones setting the pace for years to come. 2. Embrace sustainability for long-term gains. Sustainability is more than a fleeting trend. It's rapidly becoming a fundamental necessity for businesses worldwide. Companies focusing diligently on ESG, environmental, social, and governance factors are gaining serious traction, and frankly, it's about time. Investors are increasingly putting their money where their values are, and this shift in investor sentiment isn't going away. In fact, despite some political headwinds, 73% of sustainable investment survey respondents expect the market to grow significantly in the next 1 to 2 years, driven by client demand and regulatory evolution. If you're into long-term investing, which I strongly advocate for, consider companies that are deeply committed to sustainable practices. They might just surprise you with their resilience, consistent growth, and ability to navigate future challenges. 3. The compelling rise of emerging markets. Emerging markets can be an absolute goldmine for growth potential, offering a vibrant contrast to more mature economies. Countries like India and Brazil are experiencing rapid development and industrialization, a truly exciting dynamic. This can translate into explosive growth for businesses operating there. For instance, emerging market equities performed well in 2024, with the MSCI Emerging Markets Index returning 7.5% between January and August. India, in particular, is noted for its increasing economic resilience, with annual growth expected to remain above 6%. However, a word of caution: tread carefully. Emerging markets can also be volatile, so a diversified approach is key here. But if you're up for the ride and understand the risks, they can undeniably offer significant returns. 4. Why diversification matters more than ever? Yes, still, it's an oldie but a goodie for a reason: diversification. But in today's complex, interconnected world, it's honestly even more crucial than before. With ongoing geopolitical tensions, potential trade shifts, and persistent economic uncertainties, spreading your investments across different sectors, asset classes, and geographies isn't just smart, it's a vital risk mitigation strategy. I've learned the hard way that putting all your eggs in one basket is, unequivocally, a recipe for potential disaster. Think of it as building a robust financial fortress, brick by diversified brick. 5. Watch the enduring shift to remote work. The pandemic, for all its challenges, undeniably taught us that remote work is not only viable but also, for many, preferable, and it's absolutely here to stay. This monumental shift is profoundly influencing the real estate market, technology needs, and even the fundamental way businesses operate. In fact, over half of workers, 51%, were working in a hybrid format in 2024, up 5% from 2023. This trend is reshaping where and how people live and work. Companies that are truly adapting well to this new normal, investing in collaborative tech, rethinking office spaces, and fostering flexible cultures, are likely to thrive. Keep a close eye on them. They're actively redefining the modern workplace and the investments that support it. 6. Get ahead with digital finance. Fintech's moment. Digital finance is dramatically transforming how we handle money, from everyday payments to sophisticated investments. Fintech companies are leading this charge with incredible speed and innovation, and they're showing no signs of slowing down. They're making financial services more accessible, more efficient, and often, surprisingly more intuitive for the average user. The global fintech market was valued at an impressive $218.8 billion in 2024 and is projected to reach $828.4 billion by 2033, exhibiting a compound annual growth rate, CAGR, of 15.82% from 2025 to 2033. Investing in fintech, particularly companies leveraging AI and blockchain for enhanced security and personalization, could be a genuinely smart move as this industry continues its rapid expansion. 7. The growing, sometimes chaotic, influence of social media. Social media isn't just for sharing memes and personal updates anymore, it's become a surprisingly powerful tool for market influence, capable of swaying stock prices with viral trends and discussions. Think about the meme stock phenomena. It was a fascinating, if not chaotic, demonstration of collective investor power. While it can certainly be chaotic and prone to hype, paying astute attention to social media buzz can offer unique, real-time insights into market sentiment and potential, albeit often speculative, investment opportunities. It's a pulse on the collective investor psyche, if you will. 8. Why energy transition is absolutely key. The global move away from fossil fuels isn't just an environmental aspiration, it's a massive economic transformation. Renewable energy is gaining undeniable momentum, and companies involved in solar, wind, and other sustainable energy sources are incredibly well positioned for sustained growth. In 2024, global renewable energy capacity grew by a record-breaking 15.1%, largely driven by solar and wind expansion. Investing in these companies could not only be profitable but also contribute to a greener, more sustainable future, which is a powerful combination for long-term value. I've personally seen this sector grow with astonishing speed, and it's clearly not stopping anytime soon. 9. Adapt to changing consumer behaviors. Consumer preferences are perpetually shifting, but the changes accelerated dramatically post-pandemic. There's a growing, almost insatiable demand for seamless online shopping experiences, health and wellness products, and highly personalized services. Companies that are nimble enough to quickly adapt to these evolving demands and truly understand their customers are likely to capture significantly more market share. Keep a vigilant eye on consumer trends, they're often an incredibly strong precursor to future stock performance, signaling where the next big opportunities lie. 10. Capitalize on healthcare innovations. The healthcare sector is, quite simply, booming, driven by groundbreaking innovations in biotech, the widespread adoption of telemedicine, and the exciting frontier of personalized medicine. This trend, already robust, accelerated due to the pandemic and shows absolutely no signs of slowing down. The global telemedicine market, for instance, was valued at $135.71 billion in 2024 and is projected to reach approximately $709.69 billion by 2034, expanding at a CAGR of 17.99% from 2025 to 2034. Furthermore, biotech venture capital funding saw a rebound in 2024, with total VC funding increasing year over year to $21.4 billion. Investing in healthcare can be a truly compelling way to tap into a sector that's both crucial to society and rapidly evolving, offering both stability and exciting growth prospects. 11. Acknowledge the undeniable power of data analytics in today's digital age. Data isn't just valuable, it's quite literally the new oil. Companies that possess the foresight and capability to harness its power effectively are gaining an incredible competitive edge. Whether it's through extracting deeper customer insights, optimizing operational efficiencies, or predicting market shifts, data-driven decisions are rapidly becoming the norm, not the exception. Investing in companies with robust data strategies, strong analytics capabilities, and a culture that values data-informed insights can provide a significant, long-term advantage in nearly any sector. Bonus insight: the pervasive role of central banks. Alright, here's a bonus nugget for you, and it's a big one. Never, ever underestimate the role of central banks and their policies. Decisions on interest rates and broader monetary policies can have a sweeping, often immediate, impact on stock markets globally. Understanding these macro perspectives, how interest rate hikes affect borrowing costs for businesses, or how quantitative easing can inject liquidity, can give you a crucial, overarching view that many individual investors, surprisingly, tend to overlook. It's like having a compass in a vast ocean. 13. The paramount importance of cybersecurity as businesses and our daily lives become increasingly digitized. Cybersecurity isn't just important, it's absolutely paramount. With cyber threats growing in sophistication and frequency, companies that provide robust cybersecurity solutions are in incredibly high demand. Global cybersecurity spending is projected to surpass $200 billion in 2024, as executives prioritize digital security amid rising threats. I've personally watched this sector grow exponentially, and honestly, investing here could be one of the safest bets in our increasingly digital and interconnected world. The threat isn't going away, and neither is the need for protection. 14. Don't overlook evolving real estate investments. Real estate might seem like a traditional, slow-moving asset, but it's fundamentally evolving with trends like urbanization and, importantly, the lasting shift to remote work. The demand for homes with dedicated office spaces has skyrocketed, and properties that can accommodate a comfortable work environment are in high demand in 2024. Real estate investment trusts, REITs, offer a fantastic, often overlooked way to invest in real estate without the complexities of owning physical property. They can provide steady income, offer diversification to your portfolio, and allow you to capitalize on these changing dynamics in the property market. Wrapping it all up, my top recommendation, the one thing I want you to take away: stay curious and remain incredibly adaptable. The market is an ever-changing landscape, a complex puzzle, and the best investors are those who can evolve their thinking and strategies right along with it. So, keep learning, stay informed, and most importantly, don't be afraid to take calculated, well-researched risks. Happy investing! Tags: Stock market trends, investing tips, future investments, stock investing basics. Sources 1. ScaleCapital.com